What's happening, y'all? Earnings is out the way. It's time to get this money, right? Be precise. And I'm going to get in this playbook and show y'all how to do it. But before I do that, I want y'all to get in the comments, man. Get at me. Let me know what's your favorite stock to trade. And the reason why I pick a favorite stock to trade is because you get to know the motion of that stock, right? You get to know this is a stock that usually does $2 up and $2 down on a day, or $5 up and $5 down. I like to trade AMD, so I'm going to show y'all AMD first. But I'm going to do it a little mix up today. I'm going to show you Home Depot, and I'm going to show you another stock. So let's get into it. All right. So AMD, I see multiple possibilities. You got to be ready for whatever. So it looks like AMD is forming a bear flag, right? It looked like we got the bear flag right there. But it's not a confirmed bear flag. We don't call this a bear flag until we break that support right there. We got to break that support for it to be a bear flag. If it breaks through here, the next candle, you could ride it down. Now, AMD does have this gap, so it could go as low as 164 tomorrow. I don't think it's going to go that far, so let me draw additional lines of support, right? We got support just below the 174. Boom, that's support. We got support at 172. Now remember, support is where you either going to enter a trade or get out of a trade. Then we got another support. I see a strong one right here. Well, I did that a little too high. My bad, y'all. We get rid of that. So we got a strong level of support right here. If you've been watching my videos, you know I do 3 levels of support and 3 levels of resistance, because you can never pick exactly where you think the stock market is going to go. You got to play it how it comes. All right, so those are levels of support. Those are either entries or take profit zones. But it still could go down as far as 164. But on top of this looking like a bear flag, let me clean this up as far as the put option, right? It looks like a bear flag. But don't let that bear flag trap you, because on top of it looking like a bear flag, we also have a double bottom, right? We got the double bottom, which is bullish action. And the double bottom is confirmed double bottom once it breaks this line. So if the stock is moving up at all in pre-market, then we know it already broke the double bottom. So now on the bullish play, we got resistance 178. We got resistance 182. And I'm going to call 180 resistance too. And just to do a 4th level, 184. If the stock is going up tomorrow, these are the places that you want to either take profit or enter a trade. If you enter the trade at 178, you want to get out at 180. This is not an all-day hold game unless you swing trade it, and I'm going to start teaching y'all that too. All right. So we got AMD on lock. I did, you know what I'm saying? I stick with AMD. That's the stock that I've been trading because it's AI related. AI is booming. So I'm going to go to another one just in case y'all want to see something else. All right, let me look at Home Depot. I got Home Depot on the 15-minute chart, right? So let's look at this thing. So Home Depot, I see Head and Shoulders, right? And the Head and Shoulders is a bearish move. I can't even talk talking right at the same time. But Head and Shoulders, the Head and Shoulders is a bearish move, but the Head and Shoulders isn't confirmed until it breaks that neckline. And if you look at that neckline, that's a strong level of support. So we got the neck, we got the Head and Shoulders, It's not a head and shoulders until it breaks that neckline. So what Home Depot can do, it could come down to the 180 or 170. It could come down to the 370 and it could bounce. And if it bounces, it's going to turn into a double bottom. You get in the double bottom right here, right? So you got to let it play out. Don't just jump in. Wait 5 to 15 minutes. Sometimes you even got to wait longer than that. But let it play out and see what you think it's going to do. So it is a head and shoulders. Head and shoulders usually goes bearish. On top of that, we got this gap. And we do have, don't try to play the gap though, because we got a strong level of support right there. So it could look like it's going to close that gap and bounce off and pop back up. But this is another strong level of support right here too. So we got our 3 levels of support. Resistance, I'm gonna call this resistance just for the simple fact that that candle got a long wick, but right above it is resistance, and then we gonna call this resistance too. Take profit and entry zones, y'all. Don't stay in the market too long, man. Just catch a strong swing and jump out, right? So that was on the 15-minute chart. I usually, for day trading, I like the 5 and the 15-minute chart. Those are my favorites for day trading. I do look at the daily for some stuff, but 5 and the 15 for short-term trades. All right, so before I go out of here, I'm gonna go over an indicator, and that's the MACD indicator. The MACD indicator is a moving average convergence divergence, right? It's an indicator, and you can help this with your trades, right? Because the MACD indicator is this right here. This whole section underneath the chart. You can add it to your chart on TradingView or whatever, but if you notice when the MACD indicator crosses, it changed the direction of the stock. And then when it crossed again, it changed the direction of the stock. So the MACD indicator is a good way to plan your entries and exits, but don't just trade off of indicators alone. Look at it as additional help to your patterns, to your moving averages. I like the 200 and the 500 moving average, but I also do the 5, 15, and 20. Y'all like and subscribe, man, and get this money tomorrow.